Want to welcome everyone to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, June the 3rd, 2012, 5:20 p.m. Eastern. Hopefully you had a very good weekend. You're all rested up, ready to rock and roll. Markets relatively opening up flat to unchanged. But obviously, as always, I don't do a Friday show, Friday recap. But wow. Holy crap. Stock market going out the lows. The number was disgusting, and that was definitely Bank of Japan intervention. Thank you, sir. May I have another? Oh, sorry. Something got caught in my throat. Hopefully you listened to my broadcast on Thursday. We had that game plan to perfection. Thank you, sir. May I have another. Timing is everything. Unbelievable movement before. I must take note. Rarely have I seen markets so skewed in one direction. Those London numbers on Friday were disgusting. Pound getting whacked, euro sterling up before non-farm payroll. Wow. But clearly some trends look like they're going to continue. Some trends look like they're going to reverse. We have a big week ahead. I think the jobs number doesn't change much. I think the S&Ps are obviously due for a bounce this week, I think. I don't think we just melt. But when you look at this outside candle on the weekly chart, S&P looks disgusting. Oh, boy, baby. Not good. Now, we do have some things that are coming out this week, that could certainly turn things around. ECB could cut rates, which they should. I would say 75% they cut. The MPC, UK, you would think they're going to cut, increase their credit purchase facility. Not cut rates, but increase their stimulus. So you get the 1-2 punch. You get Draghi to be a little bit more dovish, a little bit easier on inflation, concerned about growth. You certainly might get a nice rally in the S&P. Could we hit 1250 first? There wasn't really much bad news over the weekend. I mean, Merkel coming out against Eurobonds, but we knew that. Big vote in Germany for the ESM, I believe, is the first week in July. Hopefully that does not get delayed and we get resolution. Obviously, we have the Greece vote, June 16th, 17th. That's huge. So we have lots of things that could pivot this market in both directions. Don't get me wrong. This vote in Greece could go horrible, and we could even see Greece out of the Eurozone. And then, of course, if they do leave, you get the mother of all rallies in the Euro, depending upon where it comes from. But as far as the U.S. and the S&P 500, I would say we look lower. I think we continue to drop down to certain Fibonacci levels. And we're looking at 1250 on the 50% retracement. Now you also, and I don't go to this much, but sometimes you need to, the 200-day moving average. And we see that's 1150. I mean, that's your spot. Now, for me, the 50 is okay, but really the 200 is when you really break significant trends to me. I mean, you have a lot of funds that cannot be long if the market is below the 200-day moving average. And I think that's where we're going. But I think it's going to be a long, crazy road. I think we're obviously getting oversold. Looks like we can come in more. And again, that 1250 spot looks like it's going to happen. Then we have the mother of all bounces. And we're going to come down to this channel line, whether it be 2 months from now. Because make no mistake, in my opinion, this is it for the euro. This is it. If they could somehow, remember, the Maastricht Treaty specifically says you can be kicked out of the Eurozone, out of the EMU, European Monetary Union. That's what the pact is all for. By the way, my bias is more we're going to bounce. Euro, I think, acted very well on Friday, given the stock market kept coming in. Yes, it was not good for the U.S. economy. You could say the dollar sold off because of more the macroeconomic number. But, the euro dollar was getting pretty oversold. But make no mistake, that was definitely intervention. And I hope you guys follow me on Voice of Forex because I freaking tweeted it 20 seconds before it exploded. Thank you, sir. Check the timestamp, baby. So, look at this euro. Obviously, the weekly did not hammer. It would have been nicer if it closed stronger, but I got to tell you, we are 5 weeks in a straight line down, 1,000 pips. We're certainly due for a pop, and a violent one at that. Shorts are piling on. I think the ECB has to deliver, and if you get the euro drilling going down into the ECB rate decision, oh baby. But again, if Greece ever goes in an orderly fashion, that would be the best thing for the euro since its inception, in my opinion. You would have the motherlode of rallies. Am I saying it's going to happen? No. It could. You can't just be completely one-sided. I mean, they could maybe get their acts together and somehow figure out how to get Greece out in an orderly fashion, how their debt's going to be done, and devaluation of that currency, blah, blah, blah. Or it's going to be an utter mess. A Lehman moment, which I think is more 75% chance. But I think that we might have some good news until that really seems like it's going to happen. Because there are a lot of pitfalls coming up. And I just think that ECB could save the day for a while. We might have a bounce into the Greece vote for a week or two. And then after the Greek vote, who knows what's going to happen? Riots in the street? Little dogs and cats living together, mass hysteria? Thank you, oh baby. So, to be short down here, I'm a little nervous. Do I think the euro is going to at some point test this spot? Absolutely. But I think we could see a nice bounce first. And again, you got the ECB out. You got lots of data coming out this week. Other countries other than the U.S., although the U.S. has some good data coming up. And we look at this dollar index, and we see that pretty much reverse a little bit Friday. And anytime you see one of these tails, you have to be a little concerned. Obviously here we had the same thing. But dollar index, certainly looking a little bit overbought. Due for a pullback. But again, I don't think it's over. My target on the S&P over the summer at some point is 1150. Absolutely. We're gonna hit that 200-day moving average. And what's amazing is in the S&P, the S&P is now negative on the year, yet you look at it, we're still way up. I mean, don't forget, we had the mother of rallies November, December, January, February. So we're just getting back to the beginning of the year. So this 200-day, I certainly think, needs to happen. And we look at this euro sterling. We also see a nice reversal here, too. I mean, the euro across the board, euro Canada, euro sterling, euro yen. You really had a sharp, violent move in the euro on Friday. And I think that just felt like it's short-term bottom. Stock market kept coming in. Euro wouldn't budge across the board. I think this euro sterling really showed itself. And I think that the market's going to think Draghi is going to deliver. So I would think the euro is going to rally into Wednesday. That's when we have the ECB. Australia, a ton of data. Don't forget, we got Australian rate decision too. They're not expected to cut rates. Maybe they're not even going to cut anymore. I think they should be cutting, especially with commodities collapsing. They might indicate they're going to cut. But that's a buy on that as well. Because they don't necessarily have to cut. But just saying that they might spike the Aussie down. But long term, that's good for growth. And if China reverses, big numbers from China, end of the week. Saturday, we get industrial production. So the markets will be closed, obviously. So depending on how we close into the week and the news, and that number's way down. 9.8% is the estimate. Remember, it was 13%. Excuse me. It was 13%. I mean, for months. And what's amazing to me is also like non-farm weekly jobs claims. These stupid analysts will be wrong one week and then up their numbers from what the previous week is. I mean, the estimate's for 385, and it came in at 383 the previous week. The estimate was for 375 the previous week, and that was up from 365. I mean, they just seem like they follow along. Well, if it's good, it'll be good. It'll be better next week. If it's worse, it'll be worse next week. I mean, where do these guys come from? Just like non-farm payroll. It's a joke. Anyway, this Aussie dollar on the weekly chart looks terrible. Outside candle closing at below here, previous week low. 200-day, 95. And that certainly was a number on the daily chart as well. If we do our Fibonacci, %50 retracement from this move. 2 years ago, true, but big spot that 95. Big. So while the Aussie held up fairly well on the daily, we look at the weekly and it still doesn't look very good. I mean, this Aussie has to really break through here. 99. But I think we do have a pop to begin the week, and then all bets are off. You know, you start now talking Greece elections. Listen, I'm not saying these Greek elections are going to go the way the polls are coming out. Screw the polls. Sentiment could change in a New York minute. Something could happen there before the vote, and this guy, I can't even pronounce his name, he's the socialist, he's still in charge. He still has a great following. So I just don't believe it, that this thing is going to go. They're going to agree with the bailout, agree to the terms, Shangri-La, everything's going to be back to normal. Yeah, right. We look at this dollar yen weekly chart, looks like death. But 78 is a big spot. Friday's lows, if you're long, it has to be your stop. Who knows where this baby could go, but certainly this channel line here. Oh, boy. We're talking 77. So we take out that channel line. Look out below. I think it was the BOJ out there. I think there's more to come. I think they are going to defend it. I think car sales in Japan have rebounded a little bit, and this would certainly hurt them with a sustained move down. Obviously, a lot depends on the bond yields, which continue to collapse. Unbelievable movement in the bond market. 10-year goes from 175 to 145 in a month. Insane. How you doing on those TLTs? Dougie Cass. I love it. It's more the silence. Listen, everyone has a bad call. Believe me. Yen carry trade 2006. Ay, ay, ay. But, of course, you're eventually right. But can you hang in there? I don't know. The average person that follows Doug Cass, I don't think is hanging in there on those TLTs. Anyway, dollar yen, again, bond yields need to come back. Stock market needs to rally a little bit, stabilize. But certainly I think the BOJ is out there. And, if you get a spike down, I think you buy the pullback. Dollar Canada weekly, right at the 200-day moving average. We have seen it stall here before. Stalled. Bang. Broke through, obviously. But I do think with gold heading up, if the S&Ps can stabilize, GDP wasn't so horrible, Big numbers coming out from Canada this week as well. And again, Australia, we have a litany of data. Unemployment, GDP, I believe. Obviously, the rate decision. It's supposed to be up 0.5% of that GDP. I got to tell you, that could be a bad number. But all throughout the week, we continue to get Australian numbers. And we'll really get a good idea of their trade balance, how their economy's doing. Big week. And for the markets as well. Unemployment, Canadian trade balance. Big number. Remember, Australia had 58,200 print last month. If they get another decent number, oh, baby. So this dollar Canada at a major pivot. I think the stock market in general, things are generally at pivots, in my opinion. And one thing that's very interesting, which is really, this is a risk-on trade, right? Pound Aussie. It's been rolling over the last 2 weeks. Stock market's going down, metals collapsing, yet this thing is rolling over. So what is it telling us? At least it's telling me we might be coming to an end. One of them's right. Either this thing, stock market's going to melt down, and this thing explodes and is a great long. Obviously, with all the Australian numbers, there's a big week in Pound Aussie. You get more of a hawkish RBA. You get numbers that are more stable and decent. And the stock market that rallies, this baby's coming in. Certainly to 155. But the fact that they're not really rallying with the market sell-off, and this is a risk-on trade, to be short. And we've been coming in. This came in 500 pips, 600 pips. I get back nice money in this thing last week. So one of these things is telling us something, and I do believe that it is these that should be more shorts. Now, could we reverse? Absolutely. This could be a big week for these pairs. Hammer time, down to double par, and then reverse. Because, again, I don't think it's over. New Zealand dollar. This baby's due for a big pop. But at the end of the day, I believe we do break lower. Right, the 200-day moving average. These are big monster pivots. Maybe break it down to break it out. But we're certainly oversold, certainly due for a big correction rally. Dollar index looks overbought. S&Ps went out at the lows. Dollar Swiss, I like it short. Nice little reversal on Friday. Dailies look much better. Grant you that. But I think part of that reason is the S&Ps went out at the lows. If you get the S&Ps up, these things would have been nicer on the weekly for sure. But do we hit the 200-day moving average eventually? Yes. Sell in May and go away is going to work, but it's not going to be easy. June, we might have a nice pop. Remember, it's the beginning of the new quarter. And I think that the really bad news is almost getting priced into the market. We look at cable, pound dollar, big spots. I mean, monster spots. All of a sudden, like it never even happened. All this strength. Amazing, isn't it? Big level. We take out 153, it could get ugly. Certainly this level right here, 152.50. Oh boy, that's almost a 2-year low. Told you the pound. Oh baby. 800 pips, 1,000 pips. Unfortunately, when things go down a straight line without a bounce, I don't do as well. You know, this is nuts. I need the pop. You know, like the pop, sell the pop, then we roll back over. 5 weeks down like this. Hard to hang in there. Sterling yen, nice reversal on Friday. Just about hitting this channel line here. And remember, people follow me on Facebook, Voice of Forex. Looks like we have more downside to go for sure. But the dailies look different. To show you a couple. Dailies look like they may have held. Euro yen looks much better. I mean, look at the doji on the Euro yen daily. Actually nailed that right at the bottom. Oh, baby. But again, follow me on Facebook, Voice of Forex. Follow me on YouTube, Voice of Forex. Of course, my website, globalmarketsradio.com. And remember, Premium Junior, $50 a month. Get you research that costs money, plus my daily emails with my trade recommendations, plus access to my premium Twitter, which I send out at least 4 or 5 a day with course corrections on trades. And that's a lot. So again, if you have any questions about that, feel free to email me, info@globalfxllc.com. But we look at this Euro yen. Nice doji. Dollar yen. They were out there. Dollar yen rallied 100 pips. What you think, on a rumor? Come on. I just can't believe it closed so weak, but the S&P did too. But they held 78, UBS saying they would intervene at 78, and sure enough they did. Are they going to let it fall more? I think you got a backstop. I think if you don't chase it and you buy on pullback from these levels, you should have a nice trade, certainly up to 79, 79.50. You buy it right. And then you got the possible advantage of a real intervention. And in that case, you get dollar yen up 200 pips. So again, big week ahead. Lots of economic numbers that can change things. A litany, not necessarily in the U.S. I mean, listen, we got trade balance on Friday in the U.S. Obviously, weekly jobs claims in the U.S. should be important. We got Bernanke speaking. We got the Beige Book in the U.S. Sure, there's some decent numbers, but it's really the global numbers that are more concerning to me. We know the U.S. sucks. And even if they're good numbers, it's not going to convince the market that things are turning. Nothing can come out from the U.S. numbers-wise this week, in my opinion, that can change the dire outlook. I mean, Beige Book is all of a sudden going to say, oh, yeah, things are great. Give me a break. If anything, it's going to be worse, right? Things are deteriorating worse. And then there'll be talk of QE, right? Oh, I'm not going to stop. Global quantitative easing. All right, everyone. Have a great week. And again, look for more action. But at the end of the day, I do think we're going to have some bottoming action. And then depending upon what the ECB and the MPC do, and then we're going into the Greek vote, and then we have the Chinese data on Saturday. So I could see us closing at the lows again. I could see us reversing nicely. Let's see what they do. Andrew Spanton, Global Markets Radio, the only voice you'll ever need. Stay posted, stay focused. Who truly loves to make you money. Bye-bye.